Scheduled for 10 then, Naila Hamadouche making yet another defence of the title that she won back in November 2016.
Alright. What's up? Good evening. Yeah, the only one here. Yeah, the only one that is still here. Let's wait for others.
Okay, I think it's
Huh?
let's wait now.
Yeah, we do that. How have you been now?
But I'm just there.
Did you watch the old videos?
Ah,
Huh?
no, I'm not like, no. I just saw this meeting and I jumped on it. But any other video, nothing. That was like,
It doesn't matter. You can still tag along with this. So then you can watch the other videos later on.
okay.
Oh God. Oh, okay. Sunday is here, game is here. Let's wait. If we can get 2 or 3 more people, we'll get started. Good evening, Tumbi. How have you been?
I'm fine, thank you. You?
I'm good. So, so far so good. Everything is looking good, right?
Yeah,
All
yeah,
right.
so far, so yes.
All right, good to know that.
Yeah.
So, after this class, we have one or two more general classes. Then after that, then we are nearly done. Then everybody can then I can now plan personal sessions for everyone. Maybe 1 or 2 sessions a week for everyone. So,
Okay.
uh, this is 9:09. Let's give them 5 more minutes. If no one else joins, then we'll get started. They will watch the recording. Come in. No. Yeah. We have 3 more minutes to go, guys. 3 more minutes. One more minute, guys. I guess they are all busy or something. By 9:15, we'll get started. All right, everyone. I guess no one else is joining us. So let me share my screen. I hope you all can see my screen.
Yes, you can.
All right, good. All right, so in our last class, we discussed neutral chart patterns. Today, we'll be discussing reversal chart patterns. So basically, we have a few of them. And on this list, there's this particular pattern that is the wedge. There are 4 different types of wedge. So we have the bearish rising wedge, we have the bullish falling wedge, we have the bearish rising wedge again, and we have the bullish falling wedge. So I'm still trying to find a way to merge the 4 patterns into 2, and I will switch them over to continuous neutral patterns, because if you look at this bearish rising wedge now and this bullish bearish rising wedge, they are breaking to the same direction, but what is only implying is that it can either start from a momentum, a rally up, giving us an uptrend, or coming down from an uptrend, giving us a rally down to form a downtrend. So this will just be a minor correction, then we go for the continuation after the breakout. So that is that. So I can easily merge these two into bearish rising wedge or rising wedge, simple as that. So it will be a neutral chart pattern. Then we have the falling wedge, which will also be a neutral chart pattern. So that will make our neutral chart pattern 6. Anyway, so let's talk about the reversal chart patterns. We have double tops. So, and as you know, when we have any pattern, we definitely have the bullish one and the bearish one. So we have the bearish double top, we have the bullish, and the opposite is the bullish double bottom, simply known as double top and double bottom. So then we have head and shoulders, which is bearish, and we have inverted heads and shoulders, which is for a bullish move. Then I explained these wedges earlier on. Then the next thing is triple top. So to cut the whole thing short, we are discussing 4 patterns now: double tops and double bottom, head and shoulders and inverted head and shoulders, triple top and triple bottoms, bearish rising wedge, bullish falling wedge. All right, so let's start from double tops, which is a bearish pattern. As you can see, this is our current trade, our GBP NZD, just a breakdown. It started from a pole, a flat correction, then we are expecting a pole to come straight down. And fair enough, we've been able to see the breakout and retest. We are only hoping for momentum to bring price down on GBP NZD. All right, so let's just pick a random pair. Let me pick GBP JPY. I think that is becoming my favorite pair of late. So can you see basically what I did here? I could have easily jumped into this trade, or I could have posted this on the group that take this trade. But after establishing the trend down, then I realized there's a rally, there's a new uptrend starting, because higher lows have been created. You can see this low right here is higher than this. So that is telling me momentum has shifted and this is an uptrend. So, and I just have to establish this trend line. I could have easily gone into the trade for a buy at this point, but because I'm expecting a break in price, I actually drew this up to this point. So because I'm expecting a break in price, I can't just jump in. So I continue checking the price, and if you realize something now, price has been respecting this trend line. If you can see how the candles have been respecting this trend line until it broke at this point. So at this point now, all I need to just do, yes, this bearish engulfing candle is enough for me to go for a sell trade, guys, but I don't trade just based on impulse. This is a very good resistance. So all I need to do now, even if I want to enter this trade now, this will be giving me a better risk to reward ratio. All right, I'll just put it at this support, yeah, support. So this has really increased the risk to reward to 3.5. So, and the stop loss is 75 pips. The reward is 270 pips. That is really, really good. Even if I enter this trade and I lose it, I don't care. Because if I enter 3 of these and I lose 2 of it and I win just 1, I'm still profitable. So that is that. So let's look for double tops. As it says, let me just remove this so as not to confuse you guys. And I'm happy we don't even need to go far before we can actually see our double top. Let me go to the 1 hour time frame. Or better still, let me just stay on the 1 hour on 2 hours time frame. The larger the time frame, the more how will I put it? The more your chances of having a very, very accurate pattern. This means if you're on the 15 minutes time frame, if you see a double top, if the chances of failing is 50-50, on a 2 hours time frame, you have higher chances of winning. You have a high chance of winning at around 70-30. On 4 hours time frame, you have higher chances at about 85-15. So the bigger the time frame, the more accurate the patterns are. So without looking too much, this easily we can play this out as triple top. This particular place, you can play it out as triple top. But let's go to the 4 hours time frame. Let's see what we have. Then if we are not so sure, bring up the zigzag. As you can see right now, this establishes at 1, 2, 3. This is a triple top. Though the wicks and irregularities, I won't have traded this as a triple top. I will have actually looked for another reason to trade this particular setup. But we have just beside it, we have a perfect double top. You can see how the zigzag is actually helping us. I'm sure merely looking at this, you can spot it already. Guys, my computer might be laggy and all, but you know, when you are using Zoom, it comes with it. It's part of the whole trade. Anyway, okay, so let's say this is where we met price. Let's say this is where we met price. There's my okay. Let's say we met price right here. We've not done anything. So the first thing we need to do is draw our support and resistance. We have a resistance here, and I told you guys I draw mine. So let's just put this here. But for the sake of my other trade, let me bring it back to where it is. What's happening? All right. So let me just use another thing to draw it. We have resistance right here, and you know I told you so many times that support and resistance is not a line, it's actually a zone. That's why I don't use line for my support and resistance. I don't get myself confused. Okay, so as I was saying, so the first thing is you establish the support and resistance. Now we've established the resistance, we can see. Now let's establish support. This is support right here. You can see I'm not cutting through the body of any candle, but because I'm not using, this is what I would have used easily for my support. I will have used a rectangle to establish that area as a whole as support. So, but for the sake of this, let's just use this line. So you can see we have our resistance right here. We have our support right here. So the next thing to now do is look at the pattern. What can you see? If you find it hard to see, if you can't really see, then activate the zigzag high low 4 or any other zigzag that works for you perfectly well. So then you can see what the market has done. Take your path to Guys, trust me, if you guys have been practicing by now, you will have realized that all these chart patterns are interwoven, and if you can actually get the basics, is good enough. And I will still give you my checklist, what I would do and what I wait for before going into a trade. So that is it. Basically, what we are expecting is just a rough sketch anyway. So this is what we are expecting: a break and retest, then to go down on the neckline. This is the neckline. So now, what is we can see this is a build up for a perfect double top. I believe you guys can see this clearly. If you can't see it or you don't understand, you can unmute yourself and ask me any question you want. So, but I believe it's just plain simple. You can see it. Let me change the color again. This is white, and you can see I made it bold. So, first top, second top. So this is a double triangle. That is a double top anyway. So let's go on. Let's now play. Let's see what we are. Okay, before we play, how to calculate the profit for a double top is just the distance between the two tops. See, this is top A, top B. This is the first peak, the second peak. So the distance between the middle low and the resistance, that is 79 pips. So you know, I told you margin, you just leave a little margin error. You give a little room for margin error. So let's say 70 pips to be safe. So we know from the breakout we are expecting 70 pips. So it's breaking down, retesting, then we are expecting 70 pips. Okay, 70 pips right there. 70 pips right there. Let's put in something to help us know where that is exactly. You can see I have a rectangle there right now, that tiny rectangle, to actually help us. Okay, so now we know where our potential profit is. So let's do something now. Let's look at the risk to reward. Basically, when you see a perfect double top or double bottom and you wait for the breakout, when you wait for the breakout and retest, this means breaking out of this yellow neckline, breakout, retest. So at this point, when it's coming back down, you can just give it a little room from the support, from the previous support, now a resistance. So let's go on. So let's go on. We're expecting price to get here. So our stop loss, that's why you need to wait for a proper break and retest. Ideally, it should even be something like this, very tight, because the pattern is always about 75 to 80% accurate. This means even if you see a good setup 5 times, even if you fail tries and you win just 1, even 4 times and you win just 1, look at this now. We have a risk to reward of 1 to 5, almost 1 to 6. This means if you lose the first time, the second time, the third time, and you win just 1, you'll still be profitable. If you win the next one, you will be extraordinarily profitable. So with price and chart patterns, you just need to make sure you follow all the rules. And what is the most important part of chart patterns? Breakout and retest. No matter how tempting that trade looks, please do not jump in. Wait for a breakout and a retest. If you know, excuse me guys. All right, guys. So as I was saying, we have a 1 to 5 risks to reward. We have a 1 to 5 risks to reward. So let's just say for us to have enough room let's go. All right, guys. So as I was saying, now we have a good risk to reward. We still have a very good risk to reward. We are risking 21 pips. We can still go a little bit higher just to make sure we are safe.
WA Business Audio.
Just to make sure we are safe, we have 61 pips profit, then let's risk 30 pips. 30 pips, all right. So that's 1 to 2 risks to reward. Even 1 to 1.5 risks to reward is still good. Ideally, it's still very good. It is still very, very good. So let's see how this plays out. First thing first, we established resistance, we established support. Then secondly, we calculated our profit, which is this, the length of this middle, Then you can see it right here. Then we just calculate a very good risk to reward ratio. So, apologies, guys. My daughter is in the room, so she's distracting me. Anyway, so
I can't hear you. Are you on mute?
just a minute, please. Okay, so now that we've established what we need to establish, let's disable the zigzag. Then we have our pattern. Then, as I was saying earlier on, let's play from here. Okay, you can see we have a breakout. We have a breakout now, and let's play. Let's see what happens. That is why we need enough margin, enough room. So let's see it play out. It's going back up. It's retesting actually. So now at this point, ideally we already have our breakout. We already have our breakout. We have our retest at this point. You can see it tested that resistance, then came down back again. So ideally we'll have put our sell stop here at the entry. We'll have put our sell stop right here. Then let's keep going. You can see, assuming we actually made our stop loss really tight, we'll have been taken out of the trade. Sometimes why you need a stop loss that is a bit wide is just to protect yourself and protect your trade. It's not because you are not sure of your analysis. You can see we have all TP hits. So even if we have divided this into 2 or 3 TPs, we already have the 3 TPs hits. So basically, that is a double top for you. So if it is a double bottom, reverse will be the case. So you establish the support, you establish the resistance, then you wait for a breakout, you test the support, then you buy instead of selling in this case. And you also calculate your stop loss the same way, but everything will be inverse. So I believe now we understand the double bottom and the double top. Okay, so
Please.
what did you say?
I have a question. Could you go back to the graph, please?
All right.
Yeah.
All
So
right,
when you talk about the line, the yellow line, is that the neck? Is it?
Yes,
Is that
the yellow line is actually a support, which is
is the support.
Is a support, which is the neck of the pattern.
Yeah. So my question is
peak. This is the peak of the pattern. This is the neck of the pattern.
Yeah. Is the neck and the resistance point usually the same in most trades?
This is the support, which is the neck. This is the resistance.
Yeah.
So I don't understand.
Sorry, I meant the neck and the support area is
usually obviously it's the support that will create the neck for you.
Neck. Perfect. Okay.
Yes.
Yeah.
So but that doesn't mean it can't be slanted like this. You can say actually this is slanted. It can be a little bit slanted. You feel me? It might not be an horizontal support outrightly. It might be what's it called? A diagonal support and resistance. But most of the time, what you just work with actually is the horizontal support and resistance. So look at this now. This is basically what we work with. Just adjust it to make it good. Sorry. Just a second. Adjust it to make it good. So here's it. Okay. Now we have a perfect support. So that is just it, because actually this is where we came into the trade, right here, second touch. This was the third touch. We tested this place, retested, broke back down again, and we went straight into the trade. So what you need to do is wait for the breakout, let it come back up. So as it's coming down, you now set your pending order right here, your sell stop here. So it starts selling. So that is that about the double top. So who else has any question about double top and double bottoms? Just know that whatever we do on double top, reverse is the case for double bottom. Okay. So do you still have any question? Bemi, do you have any question?
No.
All right then. All right, that's good. Okay, so the next thing is bearish. Okay, let's just do triple top and triple bottom since they are cousins. Whichever one we find first, be it triple bottom or triple top, we use the example for the others. Okay, I've seen one. Oh God. No, say one. I was looking at one right there. You can see we have a double bottom right here. Can you guys see that? We have a double bottom. So sometimes when you need to back test or look for a particular pattern, that is when you will literally not find it. But we'll find it no matter what he wants to do, we'll find it. Okay. Let me go back. Ideally, if the trade was going actively, you won't need to stress yourself this much to find patterns. It will come easily because you will spot what the market is doing. It's because you need to go back in time to look for something. We'll get something now, I'm sure of that. Okay, let's check another pair then, if this wants to prove stubborn. You can spot another double top right here. Triple top, the occurrence is not high, so that actually explains why we are having a hard time finding it. We definitely see one very soon. Anyway, the difference between triple top, triple bottom, double top, and triple bottom is that instead of two peaks, having the first touch, the second touch on the resistance and support, these will give you the third touch. The profit calculation is the same. The height between the support and resistance that forms the tops or the bottoms. I don't know. It shouldn't be this hard to find easily. You should be. I have seen so many right here, but I don't want to use them as an example because I don't want you guys forcing patterns. Ideally, over time, when you get used to trading it, you will know when there is one that, though it might not be, it might look a bit irregular, but it's still that pattern you're looking for. Right here, you can see a double top that failed. You can see a double top that failed, but it didn't fail outrightly anyway, because if you had wait for a break and retest right here, you'll have entered. Coming down here, you'll have moved stop loss to entry. So that's one important thing too. You should also always have that at the back of your mind. Moving stop loss to entry will help you nullify a lot of bad trades. At least once you move, let's say your target is 60 pips and you move 20 pips in profit already. Some people, if you're on some signal group, that is their TP, 20 pips, 25 pips. 20 pips, 25 pips. So many academies, when they give you trade setup, their TP is always 25 pips, 20 pips, 30 pips. So why see 30 pips and no move stop loss to entry? So that is that, guys. You can see double bottom here, a perfect double bottom, and you can see what happened. Boom, 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 breakout. You didn't really retest anyway, but if you had waited for a retest and you see it's not retesting, you can just go in or just leave it and let it ride. So you can see that is a triple.
I think there's one
What did you
just,
say?
if you go back to where you saw the double bottom, I think there's a
Yes.
triple top just by the.
Yes, a very slight retest, nothing serious. So you
So
can
I'm
see.
actually talking from the, if you look at the the downward trend, just on the top of the downward trend there.
Yes.
So if you go but your left a bit, or maybe
My
I'm
left,
mistaken.
my left. You mean
Yeah.
triple top, triple bottom or triple top?
Oh, I thought I saw a triple top there.
Can you see what I'm saying? It looks like a triple top, but it's not a very good triple top. So yes, we have one now. We have one. Actually, I'm still going to give you guys a book, so you'll be able to actually read some basic things that makes it valid and invalid. So we have a triple bottom here, which is a very good one. So you can see as I said earlier, the first thing you need to do is establish the support. We have a support right here. Establish the resistance. We have a resistance right here. And I told you my support and resistance is not a line, it's always a zone. So sometimes when I cut through weeks or I draw through weeks, you have to understand that I'm just trying to let you know this is an area of support and resistance. I'm not particular, I don't care about the exact line. So this is it. We have our first touch at the bottom, we have our first bottom, our second bottom. And the thing about triple bottom is, you see this second peak on your way to form the third bottom, it won't be as high as the previous peak most of the time, 80 to 90% of the time. So we have a third bottom. We just assume it's actually getting here, but it doesn't really matter at this point. So this is the neckline. Can you see? In a triple bottom now, the resistance is forming the neckline. And remember, in a double top or triple top, the support will be forming the neckline. All right, so now our profit is the distance between this resistance and this support. So we have 700 pips or 70 pips. This is a UDUSD anyway. So 70 pips from breakout. So this will be our and there's something you need to realize. There's a way price actually play with history. If you look at the previous high now, this profit is almost at the previous high. So what I will have done is I'll just do this. Ideally this is the line for the 70 pips profit. So I'll just do this. My profit will be anywhere between these box. See here, you can see this touch. So let's go. Let's back test now. Let's back test. All right, guys. So you can see the triple bottom now. Let's now see how it goes. Let's see how it goes. All right, we have a breakout. So I told you something about time frames. For you to get a very good breakout and retest, let's say if you analyze on the 2 hours time frame, you can go to the 1 hour time frame or 30 minutes time frame to actually catch an early breakout and retest. So let's go now. You can see we still have our pattern. Then let's keep going. It has gone out. At this point, I will have counted this as a retest, which failed, but it doesn't matter. I'll go into the trade. At least it has gone out, it has retested. You can see about 2-3 candles that has failed to close below the green candle. All right, so this is our profits. Okay, 650 now, it's fine. Then our risk, we can open that up to about 250. Anything between 1.1 to 1.5 risk to reward and 1 to 3 risk to reward is good. So and above. All right, but don't just do anything less than 1.5 risk to reward. If you see that it's not making sense and it's going below that, just ignore that trade. All right, let's go on. Let's see how it plays. We must have entered right here, and it keeps playing. It keeps playing. If we break this down into 3 TPs, I'm sure we've already almost hit TP1 off. That's even if you've not hit TP1. So it keeps going, keeps going. So ideally now we must have moved stop loss to entry, because if we break this down into 3 TPs, we must have hit TP1 and 2. As you can see, it actually hits the TP3 and it did what? Can you see that the area is very, very strong? That is why our profit is right there. And if you've observed by now, most of the time when I send out signals, when the trade hits the target, is always having a very deep retracement. It's because market has exhausted that momentum. It has to retrace and correct a little bit, even if it still needs to keep going in that direction. So let's say we've actually moved stop loss to entry. TP1 hit at this point. You can see how price is playing at the 38.2% retracement. Guys, don't forget, in our last class, Fibonacci tool would be one of the things we look at in depth. So it will really help you guys. So 38.2% retracement, you can see how price actually played out here. Retest with weeks, it couldn't break it, but it actually touched that point. Then you can see a breakdown back in price. You must have taken TP here. So if you want to continue trading, you put your stop loss to entry, you close partial, then you can see at the 61.8% retracement, it tested this point, it tested it again, it failed to test it, it tested it again, then it came down. You are still in profit. You must have closed another partial. Then you can see how it,
WA Business Audio.
you can see how it rallied up and actually hits the TP at the top before breaking down. So that is that for triple bottom, guys. So do you have any question regarding triple bottoms? Hello?
No, thank you.
What did you say, Tumbi?
Sorry, I said no, thank you. I don't have any.
All right, no problem. All right. So we've gone through double tops and double bottom, triple top and triple bottom. So we'll be talking about bearish head and shoulder, which is bearish, and inverted head and shoulder, which is bullish. So this wedge now, we will leave it till next class. I would actually like to treat it with the other wedges in depth, not just rush it. So because it is a neutral chart pattern. So it's a neutral chart pattern. So that is that. So in our next class, we'll be talking about bearish flag, bullish flag, bearish pennant, and bearish bullish pennant. So now let's go to bearish head and shoulders, heads and shoulders and inverted heads and shoulders. So gladly enough, there is a setup on GU that I have right here, which we are actually looking at. Sorry about the multiple colors and everything, but sometimes a man needs to do what he needs to do. So basically, I told you guys harmonics pattern is an entire topic on its own, and maybe later on, any one of you guys that feel they want to learn harmonics pattern, I can still be here and I'll still be here to teach you guys. So this is actually a Gartley pattern, which was the reason for the sell on this trade. Though I'm not in the trade, a friend of mine is in the trade, so I analyzed this for him to make him understand that he's actually still going to sell, because he was panicking at some point. But looking at this, we are talking about heads and shoulders. Can you see? I think this looks so. Don't let me confuse you guys. This looks so rough for heads and shoulders. Okay. Right here too, heads and shoulders is the justification for this trade setup that we have on the GN. But let me go and look for something really, really clean. And when this trade play out, we are all going to see it. So let me just go and look for a very clean setup that doesn't really have a lot of drawings. I believe right now, as you are seeing this chart, you can actually see some patterns. You can see this, you can see, but it failed, triple bottom. But this wouldn't have been a very correct triple bottom because of this middle. And look at this double bottom is slanted. Sometimes you just have to let some things go and actually trade a very, very perfect setup. That's why I don't force trade. Sometimes I might not trade, and it's because I'm not satisfied with setups I'm saying, not because I just choose not to. So we are looking for heads and shoulders or inverted heads and shoulders. And the funny thing is, when you don't need this thing, it will be popping everywhere. You'll be seeing it everywhere. Anyway, you can see another double top right here. Okay. This is not much, but heads and shoulders is heads and shoulders. It doesn't matter. Well, this will have even taken us out. You can see something now. Look at these heads and shoulders. This is the left shoulder. This is the right shoulder. Can you see? When you are drawing head and shoulders, when you use the heads and shoulders tool and it's not actually forming, see, oh, sorry. And it's not actually forming like this, you should know then it's not valid. You can see it's gone. But when I put it back here, and yeah, price is actually somewhere around there, then it is valid. So you can see what actually happened. Heads and shoulders, what are we supposed to do? Like just like any chart pattern, or just like most chart patterns, we are supposed to wait for a breakout, a retest, then price rally up. So but now see what happened. That is why you should not use very tight stop loss. Look at this now. Let me draw the part out. Our left shoulder started from here, we have it here, then we have our head, then we have our right shoulder. This is inverted heads and shoulders. If it's heads and shoulders, it will be the other way around. Then the retest, instead of this retesting up, it will be retesting down. Look at this, it's breaking out, retesting, retesting. You know, at this point, and this is the good thing about break and retest. Look at this now, it broke out, it got to this point. What's this? GBP NZD. Okay, it got to this point. Look at this. Then we are expecting it to rally back up to somewhere around there before we enter into the trade. Look at this. Assuming we just jump into this trade, it will be taking us down, taking us down, taking us down. But assuming we wait for the, what's it called? For it to come back to somewhere around here, like 50% of the retest, or at least 25% of the retest, easily we'll have entered the trade. And that is it right here. We'll have entered the trade. It will have faked us into the trade. But this is the only way we can remedy ourselves. Look at this now. I got to this point and it started going back up. So let me give you the profit now. Just like triple bottom and double bottom and all that. Our profit is the measurement in between the height of the head. This is it, the height of the head. We have 91 pips, less than 90 pips. So from the breakout and retest, this is the breakout. From this point, we have 91. Let's look for 90 pips. Yes, right there. Right there. And if you look closely, every time at all these profits, they are always somewhere around support and resistance. And yeah, we are looking for 90 pips profit. But what I told you earlier on, margin error, you give room for margin error, 5 to 10 pips. So let's come a little bit down, about 3 to 5 pips down. Okay. Now, can you see this now? Let's calculate our profit. We've calculated our profit and we see where it is right now. We marked it out. So let's say we enter the trade right here. Our profit is right here. 79 pips, let's say 80 pips. Then let's say we want to risk 40 pips, which is, that will give us 1 to 2 risks to report. Ideally, this might have even faked us out. So if we go 1 to 1.5, we will still be safe. So most of the time, it will not hit your stop loss and it will go into profit. And that's the good thing, because you are giving yourself reasons to still stay in the trade longer. So if you can't afford the risk, don't just go into the trade. So when you see this now, You don't need to say it is 80 pips. Okay, let me use 0 point. No, you ask yourself, what is my risk on every trade? What is the 2 to 5% I can risk? How much is this? So what lot size am I supposed to use if these 50 pips will be so amount? So that is that, guys. Let's just reduce this to 50 pips. Yes, so this is 80 pips. So that gives us 1 to 5 naira to reward. So now look at this. It came down, but it didn't hit stop loss. Then started coming back up. Ideally, it's easy to teach with history, but I believe we've traded together for some time, and some of you have been trading together for God knows how long. So you know this is what I do practically every day with my trades, and it works. So this is it. You can see it's coming down, going back in profit. It came back down again. But the minute you see it start rallying up, start going up, and it gets to, that is why it's good to measure your stop, your TP. Just use the Fibonacci retracement to break your target into 3. Can you see TP1, 38.2%? Look at what happened there. It actually hit, then came down. It still didn't go back to entry. You will have moved stop loss to entry if you still want to keep riding this trade. Look at how the TP2 played with price. Look at this. It created a resistance. You can see 61.8% retracement. It created a resistance. Guys, you can watch these recordings over and over again. The more you watch it, the more you understand. And the more you practice, the more you even understand. So that is our TP2 hit at that point. Then you can see what happened. It didn't still come back to entry. Price started giving this zigzag, blah, 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 blah. And it started rallying up, rallying up, rallying up, till it actually hit our TP3. And what happened? It came down, TP1, TP2. We are out of the trade already. We don't care about what is going to happen next. All we need to do is just wait and patiently see if we can see another setup. So that is that for triple bottom, inverted